Welcome back to Around the Table with Stacy Smith. We're talking about investing in the economy. Companies are beginning to report their fourth quarter results, and so far, overall earnings for those companies that have reported, they're down around 4% or more. So several major corporations are going to be reporting this week. What do you expect? The same sort of decline in earnings?
Yeah, and I think mostly because the companies themselves have telegraphed that they were not going to earn as much this year as they did last year in the same quarter. And I think that's correct. The more consumer-facing companies, I think they were really great about being able to pass along costs. Let's just tackle food and a company like ConAgra. They had the ability because of the flush state of the consumer earlier in 2022 to be able to pass along all of those costs. And now they can't. And they're selling less product. And you saw that too in the retail sales, which is mostly around the larger companies like Macy's and that sort of thing, that they too have said, hey, people did not spend like they did in the past at Christmas time during the holiday season. And I think the consumer was just overburdened and finally said enough and didn't dip into their savings as much as the retailers had hoped. So I think that is showing some progress in this current month where we're seeing some of the markers of inflation fall. And this is things that the Fed really pays attention to.
Yeah, I would say that, as Kim said, this was not unexpected in terms of earnings. It's been interesting so far to watch how company stock prices are responding. And, it always comes back to expectations. And, we had some financials report last week, and one got hit pretty hard because, yes, earnings were lower, but they were lower than expectations. Also had another financial company report, and the results weren't great, but they were in line with expectations. So, I think that we're going to see some volatility here as companies report this week. The good news, and my team doesn't like it when I say this, is that this downside volatility that we get really gives us a chance to make some purchases. If we're long-term investors, these are the times that you actually really want to be active on the buying side, which completely goes against emotion, right? So, we'll see what happens. I think that we have to be very mindful of what the consumer is doing again, because the consumer makes up 70% of the economy. And if we continue to see deterioration there, then that gives us an indication of where we as money managers should be allocating money, staying away from, or trying to pick up good bargains.
When companies report, this is a general question, anybody wants to take it. When companies report, do they kind of do it in group settings? In other words, do most retailers report one particular week and most financial institutions another, and manufacturing another week? Or is it just spread out throughout the entire reporting season?
I think you've identified a great trend that yes, the financials generally report first and the retailers report last. And even though companies have a ton of computers helping them, tally their results, it does take some time for retailers to work through all of their returns and just the larger problems of trying to figure out what did they sell during the quarter. Believe it or not, retailers still need more time. And that's why they're kind of at the tail end of earnings season. And then it's kind of a mixed bag in between. But it does seem like, especially companies like, semiconductors, I'll do it on like 2 days and just deluge you, which is actually very helpful to people in my position, which I have to evaluate how did these companies fare against their competitors. And if you're getting all the data at one time, it makes it easier, actually. I don't think that that's why they do it, though.
In addition to the financial and informational considerations, there are operational considerations, not with all companies, but when is my buying season? When is my selling season? When is my collecting for selling season? When do I have a more clear set of books? And that's why companies have different closing dates too on their reports.
Yeah, the financials tend to come out first because the financials really don't have much in the way of inventory. Any inventory they have is like money or securities that are
Exactly.
priced by computer instantaneously by the second or by the millisecond. Retailers got inventory. You could walk into a store, the inventory's there, and there's the sale table over there. And I don't know how they figure out what's there, because after people have gone through it, it's all messed up, and multiply that by all the locations. So for them to get their inventories in order, construction type people have receivables, and good receivables and bad receivables they have to measure, which through the winter is a bigger deal. In the summer, they're creating the receivables when the weather permits. So that's some of the in the weeds thinking of what happens with these businesses, which is why it takes a little bit of time for some and not too much time for others.
I want to bring it back to the Fed here. Does it make a difference for the Fed as to whether a particular sector sees a decline in earnings, or for give an indication that the economy is slowing? I mean, does semiconductors make a big difference to the Fed as opposed to retail sales?
Not intrinsically in the sector. But if it's in the case, and we've talked about it so much, of inflation, what are the leading indicators that are propelling the inflation we're experiencing? Well, then the Fed has that within its gun sights, and we'd like to see that hotness cool off a bit.
Yeah, I mean, the Fed is not supposed to be managing the market, but
Right.
Even for us, and this is really important for listeners to know, even if you don't own individual stocks, there's a lot that you can garner from knowing what a company's earnings are. So last week, and I'm not going to mention specific names, but we had financials report. And one of the things that we're looking at is, what are the non-performing loans? What are the credit provisions? Where does the bank see the economy going? Are they allocating more money to their loss reserves because they think that people are going to be defaulting on their loans? And we did see that happen pretty significantly. And what is loan demand? It helps us get an idea of, what's going on in the economy. And you can really get that's one of the, I don't know, maybe I'm just a geek about these things, but you can really get that with any company that reports, to try to get a gauge for what's going on with the economy overall.
All right, go ahead.
Yeah, take a break.
Go ahead and finish your thought.
There's one, I'll make it quick. And also we want to guard against looking at things in lockstep. You've said it with your questions. Not all companies are the same, even within the same industry. So they're still required to evaluate. If you own mutual funds, your mutual fund manager is required to evaluate companies individually. And also when we say things like, are earnings going to go down? That may not necessarily be all that bad. Down by how much? Are they still profitable? Are they still showing earnings? Was it just a matter, as Carrie said, of disappointing the analyst? And so therefore the institutions made a play that has nothing to do with the future value of the company. So you're not relieved of the responsibility of doing good research.
Okay, great. We do have to take a break. We'll be back in just a moment.